Okay, testing. 1, 2, 3. Testing 1, 2, 3. The Wayne in Spain falls mainly on the plains. The ants in France stay mainly on your bonds. We got sound? Please confirm. I'm going to assume you can hear me. That says you can hear me. That says you can hear me. That says something. I don't know. We'll just go, you confirm. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. Good to see you. Happy holidays, everybody. Like I always say, peace on earth, huh? Peace on earth. Or should I go, peace on earth? peace on earth. Peace on earth. I say it every day, but it's never a bad thing to remind ourselves, right? Peace on earth. So anyways, hey, welcome to the webinar. The markets are insanely quiet. It's the holidays. Everyone is sleeping in or spending time with their children or their mommies and daddies. I'm here with you. So good morning. Today, we will just go through the charts. We'll see if there's anything that's happened. That's it. We'll just do some technical analysis and zoom around and stuff like that and see what we can see. And that's that. So if you have any questions, make sure you ask. If you want me to cover a particular pair, sure. Okay, but this is just fun. I didn't even boot up my trading computer this morning. You know, I just look at MT4 and everything's cool. So anyways, so we'll just go with that, huh? Good enough? So thank you to you for being here, and thank you to Traders Way for sponsoring this webinar and bringing Forex.Today to the world. They want you to succeed, so please pay it back by visiting tradersway.com and opening an account. Cool. Mr. Highvolt's been doing the courses, the training, and stuff like that. Yeah, I'm super excited that I'm not studying. But anyways, but I've been doing a lot of meditation since final exams have been over. So anyways, you should be able to see charts. You'll see nothing's really changed. 700 pips, 100 pips, 40 pips, 65 pips. That's about what it was yesterday as well. So nothing on those have really changed. That's cool. Right on. So let me change this. Let's tile this vertically. And you can see these are all dollar pairs. Dollar, dollar. All right, these should go down. This should go down. So this is the one that's off. So let's look at the first three if we have congruency. Okay. We're looking at January's projected high is there. Now, the interesting thing is if you're a bull, this is your price. Okay. This is, if you're a bull on pound dollar, that's what you're thinking for the month of January. So you're projecting the monthly low for January is essentially 29. Okay. So that could be very interesting. And you'll see that when you're using the next week's pivots and stuff like that, we're at next week's M2. Okay, but we're also at the January monthly. This is supposed to be 2. We're also at a monthly M2. So if you're a bull there, that's that. If you're a bear, you actually need this to rise quite a bit. So you need your bullish friends to come in and then you're like down. Okay. I kind of think like all of this is what I've been saying for quite some time when it was way down, that, you know, people are worried about, London being shut down and everyone moving to Frankfurt, and you know that ain't gonna happen. So there was a time when it was oversold. Um, Also, I was thinking like, okay, Brexit is real news for sure, right? Right, it's real news, and there's real politics and all this kind of stuff. But I was thinking about like the longest point of view, the longest term point of view. Would I bet on the British? Like, can the British pull this together? In the long run, will the British do better without the EU? Will the British do better just managing their own? Yeah, I think they probably could. Yeah, I was thinking about it like, yeah, yeah, they could probably, it'll probably work out quite well. They were fine for 500 years without the French and the Germans, right? So like they can figure this out. I think it'll work out. Now I think there'll be a tumultuous couple of years, but you know, would I be a buyer of the pound? Yeah, yeah, I think I could be. I think having this knocked down so far from where it was. I mean, I remember it when it was way over 2, right? I remember this stuff. So we've gone from here to here. Okay, that's good. They paid the penalty, I guess. But they're free to do what they want any old time. So maybe that's cool, man, right? So maybe I buy dips. I don't know. But I'm cool with that. Would I, like, that's the big question, right? Would I bet on the British or would I bet against the British? And I'm like, I think they'll get their act together. They'll make it work. They'll be fine on their own. All right. Dunkirk in the Battle of Britain. Yeah, okay. Sure. Yeah, Dunkirk. The spirit of people of the British public saving their boys. That's the amazing story. But also, there was an incredible amount of luck where the Germans just screwed up, and oh my God, that Dunkirk could have been the most horrific. So, oh, that would have just, what was it? It was like 200,000 British or something crazy. 200,000 sitting on the beach. And the Germans stopped the tanks. I mean, like, it could have been unbelievably, horrifically bad. It was so, yeah. So, anyways, I don't know if that was a good example, the Dunkirk one. But that was good. They got him home. So, anyways, yeah, the Queen's going to hold everything together. So, anyways, that's what I was thinking. I don't know if it's valid or if it's just, you know, bias or whatever. But all right, so let's take a look at this euro. See, here's what I think is going to happen. I think we're going to get like some dollar strength very quickly in January. And then on the longer run, I think the dollar is going to weaken. Oh, Kev wants to know like how I meditate. That's actually funny. Um, I was supposed to be quick in the shower today. That was my plan. Get up early, and I need to do some stuff with holidays. We have family visiting and stuff like that. So I'm like, I'm gonna get up. Boom! I'm just gonna take a 5-minute shower and I'm gone. And I go so because I meditate in the shower, and I was there like 40 minutes, and all of a sudden I'm like, ugh, where am I? You know, and I come out of my meditation, and it's just I'm so trained that I sit down, I'm gone. I'm just gone, just lost in thought. So yeah, that we'll have to figure. I'll have to figure out a way to teach you how I meditate, but not today. So anyway, so this is what I'm thinking, and this is totally sketchy. All right, so bear with me here. My total random guess is we have a big drop like this, and then probably recovery. Now, this might be better played on the pound versus the euro. So that's why I'm kind of thinking, right? this is euro that we're looking at, but that pound might do something similar and it might do it better. Okay, so I haven't quite decided yet. Maybe I might be a year early before I start, betting on the British, but anyways. Sure, Barry. All right, so anyways, dollar strength and then dollar weakness, but I don't want to play against the Swiss franc, so it's kind of funny that that's there. But let's go to the yens. Okay, let's go to the yens. Let's take a look at kitty cat. Okay, same kind of thing. This is on a 4-hour. Let's drop into like a 15-minute chart. And not much has happened all week, right? What's the weekly high right now? Weekly central pivot, weekly low, right? M2. So bulls are buying it low, bears are selling it high, but nothing really is happening. That's actually a good sign. It means like people are done. Prince says, I remember last year there was a flash crash or something like that. Well, the way I look at it is it's just everybody, like the professionals know what they're going to do before they do it. And everyone else knows they're going to do it before they do it. It's common knowledge amongst professionals, right? So what happens is everybody kind of does the same thing at the same time. So it's not really a flash crash, but if you're a portfolio manager, you rebalance at the end of the year, and especially at the beginning of the year, depending on how or why you need to rebalance. But if everyone's doing the same thing, you get a dramatic response, right? So I've told you in years past, and I guess I'll tell you again, especially when it comes to the stock market, let's say. You look at make a list of 5 companies you'd like to buy. If you could buy them for 10% lower than today's price. Okay? Get ready. So if someone says to you, there's a tsunami coming, you probably shouldn't stand around waiting until you see the water. So, like, there's profit taking coming. The stock market's going to move. Now, it's going to drop and crash and all that. And look, I'm not so dramatic. Okay? But I would say to you, get ready now. Okay? And if you find the stock market on January 2nd drops 10%, what are you going to buy? That's how you should be thinking. Okay? Daniel, it sounds like you need to take the course. So anyways, let's take a look here. Euro yen. So I got a short here, and we were talking about, these are all day trades folded into weeklies. So here's a day trade short, here's a day trade short. So I said, well, the next thing you should be doing is you should look for the down, 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 up, up off of roll reversal. Take that one. So I'm imagining you're short there. Down, 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 roll reversal here, right? So I'm imagining you're continuing to short, as I've taught you. Should be pretty easy, right? Down, 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 up, sell, 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 down, 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 up, sell. Right? Will the courses ever get removed? Sure, yeah. Okay, take a look at Beast. Much different, right? but 100% reversal and now lower. But look at the day trading, guys. I mean, I spent that whole week teaching you how to day trade, right? Down, 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 up, sell, down, 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 up, sell, down, 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 up, and we're in a sell zone, right? Cool, right? Can I do Lira today? Sure. Okay. And all of that, guys, all I'm doing on these charts is a combination of price action and pivot points. So you would take the price action course to learn price action, and then of course you'd take the swing trading or some of the other ones like basic training, or there's a third one I think pivot points come into, but it's just pivot points, right? All right, so you can see now this one is much more bullish than the other ones. Interesting, right? There's no decent bearish trades. In fact, they look like they might be more bullish, right? So if you switch the template to say, hey, I'm a bull, okay? How does it look now? Let's drop into like a 15-minute chart. How does it look now if you're a bull? Up, down, down, buy. Up, down, down, buy. Up, down, down, buy. Up, not quite. Up, down, down, buy. Okay? Cool, right? All you had to do is be a bull. That's why I've made this indicator force you to pick one or the other. The typical pivot points, if you're ambivalent with your bias, you're going to get all kinds of signals. I'm trying to get you not to have signals. So check this out. If you're a bull, you buy here. Now, the interesting part of it is you knew it during this period that this was your buy. So it popped up, higher high, higher low, boom, right in your thing, right? You buy it, but check it out. If you buy there, look where your target is. It says it right there, R2, bullish profit zone. So it says, look, you should buy it here and get out here. Cool. Anyways, exotics. Okay. Now exotics do better on a risk on atmosphere than risk off. Like when you're in risk off, you're not thinking about throwing money at South Africa, Mexico, and Turkey, for example. You're getting out of risky positions, putting your cash in the bank, putting in your annual report that you invested in Turkey, you made 3,000%, and then now you're out, and then you'll want to get back in next year when you have the opportunity. But you have to book your profits, okay? So it's not a good time to be trading these exotics. Well, with that said, let's do peso. Here's your sell zone on the peso. Here's your sell zone on the peso. Here's your sell zone on the peso. And here's your sell zone on the peso. So if you were a bear, once again, right? And, that might frustrate you when I say these things, but it's designed to frustrate you. If you're not a bull or a bear, I don't know what the heck you're doing besides daydreaming or something. So you have to know where you stand. Gee whiz. So if you're a bear, this is redonkulously, stupidly easy. Down, 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 up, sell. Down, 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 up, right? Sell. Oh, my mouse, right? Cool. Cool. Right on. It's worked it out. Okay. Now, how many trades would you be on here? Well, to know this, you'd have to be very aggressive, very ready, willing, and able. And I wouldn't count that. But this move down confirms this idea, aka your plan. So pulling back into the sell zone, selling it on a Monday in the pivot profit zone, that's stupid easy. That's just doing your job. That's just showing up to work. That's not doing anything special. Okay? Look at that. Hit the target. Cool. Now this is a little sloppier, but it's holidays, right? But, all right, it's the same thing. Really, the easy parts is, look, on a Monday, you're at an M3 and you're a bear, sell it, right? It's a Monday, you're right in your zone, sell it. Even here, this is a Monday, you're on your price, sell it. I mean, dude, if you're a bear, that's not so redonkulously easy, right? Javier, fxbootcamp.com. I believe there's a link in the video description below. So like the training videos are at fxbootcamp.com. Live mentoring is at live.fxbootcamp.com. My chart templates are at metatraders.com. All right, so go to Traders Way, open an account, download MT4, then go to MetaTraders, buy the templates, pop them in. Right? Now you have the tools to trade with. If you still don't know how to trade, and you like the daily webinars, but you need more, then consider either the video training. Well, really start with the video training, and then when you get yourself to, from, let's say, to competent level, having a live coach will just rock your world. And so once you're done the videos, you should probably consider live mentoring at live.fxbootcamp. So that's how it all fits together. All right, Eurozar. Let's see. Let's see if we can figure out how to trade this. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, sell. Down, 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 up, sell. Down, 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 up, sell. Yeah, I guess that's tradable. Is that right, Max? What, you got that off, where did he say that? Bloomberg, I think, right? The Bloomberg interview that he did, what, a week ago? But you should preface it differently. Okay? You should preface it differently. What he's saying is, with full employment in the United States, a healthy credit system in the United States, and for some stupid, ridiculous reason, the Fed's cut interest rate to stimulate the economy further, that there's no plausible reason why the stock market in particular will decline significantly in 2020. We just don't have those conditions. Now, when we get closer to the election, if there's a big surprise, and by surprise I just mean not Trump, because if Trump gets elected, there's no surprise because we already have the White House and the cabinet and the policies, everything's in place. So we just go on. If someone else wins, there's all this uncertainty, and if Warren wins, there's on top of that even more uncertainty just based on her, policies and stuff. The stock market would drop. So between now and then, Druckenmiller is saying, under these economic conditions, we're talking macro now, there is no logical reason for the stock market to decline significantly. In fact, it'll probably go up. Even though it's way overbought and all this stuff, it doesn't matter. You have to understand, it's just the conditions. Therefore, you should be bullish on global macroeconomics. Now, you might be concerned, which is fine, but as long as the Fed has stimulated the economy, it's going to be artificially bullish. So who cares? Okay? So what do you do when you're fundamentally bullish on global macroeconomics? You're short yen, you're short Swiss, you're short dollar, you're long CAD, you're long Aussie, you're long Kiwi. Am I missing anything? Okay? And we'll probably find, with interest rates so low in the United States and the rest of the world, that there'd be a huge demand by portfolio managers to find yield outside of the bond market. So they're going to start buying South African rand, Mexican peso, Turkish lira, etc., etc., etc. Boom. So like, don't listen to when you hear something like what you said, Max. Right? You're like Druckenmiller. He says short yens, buy long commodities. Right? Look, don't pay attention to the effect. Who cares about that? Right? What matters is the cause. What cause is Druckenmiller talking about? Okay? What you don't want to do is start filtering your own brain with other people's nonsense. Okay? So it doesn't matter what Druckenmiller says he's going to buy. It doesn't matter. What matters is why. And then you can say, oh, well, you either agree or you disagree, or maybe you do your own research, or you have multiple strategies, and that's one that you're paying attention to. Okay? But you got to, and I'm not picking on you, Max. What I'm saying is I'm just re-emphasizing, because again, I'm not even saying you're saying this, but I want you to move away from taking signals and hot stock tips, and that mentality is just really dangerous. And what could happen is I can build up skills with you over the course of weeks and weeks and weeks, but then you can be taken down by just like that, right? Max says you got to agree with him. No, I don't have to agree with nobody. Okay? So what you were saying is he says short the yens and buy commodities. I'm more interested in the cause, not the effect. And so he says under these circumstances with the Fed in their current policy, this is what you do. But, I do this every year. Right? Well, they're kind of the same thing, Max. So that's the other thing. Like, I've only been telling you this for 6 months. So now Druckenmiller's on TV and he says the same thing, right? But yeah, but like, so I just, right? Right? No, I know. No, but I do. I do agree. I've been saying this for months and months and months, but I don't say buy the Kiwi dollar. I say let's look at why global macroeconomics would do this or that. What are the things that we're analyzing to make our opinions about global macroeconomics and not? And what are the funding currencies? What are the risk currencies? What are the risk on and risk off scenarios? What are the things that trigger these things? You know, so on and so forth. But yeah, sell the yen. Yeah, but not in January. You see, like that's the other thing too. Um, Druckenmiller would say things like, okay, he in 2020 he's going to sell the Japanese yen and probably the Swiss franc and probably the dollar. But what you don't realize, or I guess I shouldn't say what you don't realize, everyone must take into consideration that the Japanese yen could be unbelievably ripper strong during 2020. Maybe not the whole 2020, but imagine your favorite yen pair drops 500 pips before it goes up 1,000. Now, the way he plays it, he's a professional and he'll find his marks, okay? And he'll know when to buy based on seasonality, but also based on price and all these other things where an amateur would just buy it and or sell the yen pairs and say, well, Druckenmiller is a self-made billionaire. That's what he said, so that's what I'm going to do. And you'll blow out your account, right? So let me give you an example, right? And again, Max, I'm not picking on you. I'm not saying anything bad about you, okay? But I'll give you an example. George Soros used to be in the news a lot more back when I first started, for example. And you would read in the newspaper on a regular basis that that he's short the U.S. dollar. Okay, huge money too. He was extremely short. He was one of these guys saying the U.S. dollar is going to be worthless. But that entire year, okay, think of this. The entire year, I bought the US dollar. And this is back when I read newspapers and stuff. I had 12 newspapers. I had newspapers flown in from Japan and the UK and stuff. Like, no joke, right? Like, I read Japanese newspapers. Come on, seriously, right? So this is when I was really in tune because I was trying to figure out my fundamental way, if you will. And the whole year he's like, the dollar's worthless. I'm selling it. I'm selling it. I'm selling it. But under the market conditions as a currency trader, in particular an intraday trader, I'd trade 16 hours a day, right? So as that person in the hot seat all day, every day, I was buying the dollar. And I remember reading it. And at first I was scared. And then after a while, I'm like, I don't know if this guy's nuts or not, but the dollar is clearly strong. So for an entire year, I bought the dollar. And for that entire year, I made money buying the dollar. And for that entire year, George Soros kept saying, he's selling the dollar, he's selling the dollar, he's selling the dollar, he's selling the dollar. I'm like, all right, well, I'm buying it from, right? I'm buying it from Georgie Boy as fast as I could. And then we got to a shift in central banking policy, and I stopped buying the dollar, and I started selling the dollar. But one of the things I realized at that period is like, oh, what he does and what I do, they're based on the same information, but he's on that other time frame. You understand when I talk about fractal geometry, I'm like a 15-minute chart, I would trade exactly the same as a 4-hour chart. And the interesting thing is, like, I'm doing what I'm doing, he's doing what he's doing. And for the first time, I realized we're both right. The thing is, it takes George Soros a year to build his position. Right? Like, just to get into his trade, it takes him a year. Looks like I got an A, Chris. Thank you. So think of it that way, guys. And so for the next 3 or 4 years, George Soros made a ton of money selling the dollar, just like he said he was going to do. But because I'm not George Soros, I'm in the 6 degrees of separation of George Soros. But because I'm not him, I spent a whole year buying the dollar, and then I spent 3 years selling the dollar where he just sold the dollar. And to him, 1 year is irrelevant, really, right? He was just setting it up, right? So, anyways, so you have to think of it that way too. You are not Druckenmiller. Druckenmiller, might watch the Japanese yen get strong for 2 or 3 months, and he only re-strengthens his position where you got 50 pip stops. He's got 5,000 pip stops. You know what I mean? So yeah, have your bias first. So this is what I teach you, of course, strategic and tactical Forex trading. So like Druckenmiller says, the stock market will go up in 2020. Risk on in 2020. Right? That's his opinion. So now you take that strategy, risk on for 2020, and now you use technical analysis to find your levels of support. And now you start entering your trades based on that. But the first question you ask when you're doing technical analysis is, if you're risk on, okay, so you're long Japanese yen pairs, the first thing you should look at is you open up your Japanese yen pairs, all of them, not just one, all of them, and say, are they trending up? That's the first thing. And if they're trending up, you're like, good, the market's bullish, I'm bullish, good, I need to buy dips at support. Where's the next level of support? You see what I mean? But you have to realize that in that period, you're going to open up your yen charts and find all yen pairs down, and you'll say, okay, the yen pairs are not bullish now. So I will probably not trade, or I'll back off, or I'll trade smaller or something. But you recognize the trend is down and you're a bull, so you back off. And then you watch it bottom out, and then you watch it trending up. And now you jump in and you trade. Okay? Easy. It should be easy, guys. It should be easy. Okay, so you know I'm looking for this to fall. This looks like a downtrend. These are selling pivots. Easy, right? Hey, what's up, JP? And to you, JP. So let's do the Turkish lira versus euro. Okay, I'm a bear, right? Does this look bearish to you? Take care, Trader Nick. Does this look bearish to you? No. So I'm done for today. Isn't that nice? Yeah, Chris, there's logic to that because they're selling their book, right? They're right. If they're convincing you to sell, that's probably because they need to buy something. So, anyways, it's too early. Look, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 up. Yeah, this is a big one, but I want to see this. Okay. So, for example, and Max says, you know, why is it not bearish? Well, let me just change the point of view, and maybe it'll be different. I don't know. But if you were a bull, you'd be looking at this. Okay, let's go to that 15-minute chart. And do you think bulls like these market conditions currently? If you were a bull, would you be a buyer? Is my bias based on fundamentals only? Well, there's fundamentals and then there's seasonality. But yes, yes. You can also throw in long-term technical analysis. So I want to know fundamental analysis of macro, well, really of central banking policy. So let's clarify a little better than just fundamentals. I look at central banking policy. Okay. Then I look at seasonality. And then I look at news. News being the least important of them, almost irrelevant. Okay. And then on top of that, I look at, let's say, well, long-term techs. And on the long-term techs, I'm essentially saying, all right, based on the analysis of these three things, I think this market should be, well, actually, I want this down, okay? So now I look at long-term technicals and I might say, this is not down in the moment. And so now I wait. And when it does head down in the moment, then I'm going to fire for effect. Okay. Pure mathematics is sentiment analysis. I use my pivot points as sentiment. Remember, they're weighted to include sentiment. Okay. So this is not bearish yet, Max. I mean, you could argue. I'm not saying you can't be. I'm telling you what I am. You can see that we did get the regression channel, right? You see we got this projecting that, this projecting that, and this projecting that. That's cool. That's cool. I would feel more comfortable if I was me, if we saw something like this first. Okay? So I'd rather be short here than here. COT is really late. It's really slow. It's nice to look at, especially if you're not sure why this is going up. You can look at COT data to find out, is it bulls buying or is it bears taking profit? Okay, so you could it's like for academic research, so to speak. Like the guy that made the COT famous is what's his name? Uh, what's his name? I can't even remember his name anymore. I wrote a, he's a, I wrote, contributed to a book, and he also was it Williams? I guess it was Williams, right? Yeah, Larry Williams. There you go. So he did his big thing, but that doesn't exist anymore. That market that he talks about or talked about, it doesn't exist anymore. Okay, just doesn't exist anymore. This idea that the market doesn't know what's happening for like 5 months because people aren't doing the fundamentals and they're not doing and there's no technical analysis, right? Like that's long gone. Like in that Druckenmiller interview you were talking about, um, he talks about how the age of quants has changed everything and that everybody is super ridiculously smart, but that's why they make millions of dollars a year on Wall Street. So one of the interesting things that he said in that interview, Max, was when he was done with university, the economy was in like the ninth year of a recession. Okay, and Wall Street was a terrible place to go for a job because everyone had been fired and laid off, and there was just long periods of just risk off. Take care, Greg. So, anyways, he goes to Wall Street. He's the only dude in his university in his graduating class at a good university. He's the only one that goes to Wall Street. Nobody wanted to go to Wall Street. It was the end of that. So he shows up to Wall Street and he said, the only people that were left on Wall Street were all the losers that hadn't quit or got fired, right? And it was just like these slothy, he didn't say it this way, but bottom line, it was B or C grade people in Wall Street. So he showed up and he said, right off the bat, a lot of his success was the fact that everyone around him made him look good. And he's like, he said like he would buy the stock market in the second year and sell the stock market in the fourth year of a political cycle, and that made him money for decades. Like people couldn't compete against that. That was his big strategy. In the second year of an administration, he'd buy the stock market. Done. Wait 2 years later, stock market's going to be up on the election. Sell the whole thing. Now he's out. And he was like, look, I wasn't that good, but everyone else sucked. Right? But now he says, now when you go to Wall Street, these guys are making millions of dollars a year, and it's attracting the smartest minds and the best technology. And he's like, you can't just show up and wing it like the good old days. Right? So yeah. Larry Williams and COT, I kind of connect together, but that data isn't the same anymore. So I look at it like, again, is this stock market going, is this market going up because people are buying it? Or is this market going up because bears are taking profit? Because that's actually still not technically, but let's say the market's still fundamentally bearish, but it's going up. And that's where a lot of people have a problem. That's sort of the next wave of logic. The market's going up, but nobody's buying it. Well, that's useful information, right? But would I place a trade on that information? Not today, but if it made me a bear and then I see this roll over, right? Then maybe I say, okay, now it's kicking in. And of course, if I'm a bear, I have to get off this template. I go to that template. I go to my bearish template. And now I'm looking for opportunities to sell. Okay? Maybe that's how the COT would help. But it's just one little thing. And to me, it's not that important. But academically, it's pretty interesting. And of course, here's the other thing. And you might not like this answer either, but you're sitting down with a potential investor or maybe someone that has invested $1 million with you. Now they're just checking up with you from time to time. You're having lunch in Beverly Hills, and you're cracking your lobster, and your client says to you, um, hey, should we be worried about blah 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 blah? And you go, right, and you break open your lobster, and you're poking through there, and you're like, well, actually, I was just analyzing a commitment of traders report yesterday, and it says not worry about it. And he's like, oh, well, what's the commitment of traders report? Oh, well, this is a government report that was created after the 1930s crash, where the government said they should probably get involved in like these large institutional plays and large institutional trends. In particular, back then it had to do with how much wheat or how much corn was planted, because this was, strategically important to the entire nation of America, especially after wartime. So this information is gathered on a weekly basis by the U.S. government. In fact, they do a really cool thing. They are able to figure out who's hedging through a taxation scheme, and then they make large institutional speculators, report their positions, and from that you can take the hedgers and the speculators, and then you can take total volume and figure out how much dumb money there is, smart money there is, and hedgers there are, and you put them all together, and you take this and you can look at some really big trends. And it's not an opinion like sentiment, but it's actually money in the market, where I can look, and I have looked, in regards to your question, I have looked to see where the large institutional money is sitting right now. And I'm like you, I have my concerns, but I have to stay patient. I have to stay with the game plan, but I also have to trust and verify. So if I see a move on this commitment or traders report released by the Commodities Futures and Trading Commission, then I'll say, aha, people also see what you and I see, and they're starting to make the change, and we'll get on the wave early. And they're just like, good, I'm glad this guy's on board, right? Like, that's it. That's the major use of the COT data. You explain to your client that you know a lot, and you got some hard facts, and you're on the game, and you're doing stuff that they wouldn't do, and they're like, I feel really comfortable with this manager managing my money. This is really good. And then you say, oh, another champagne, sir? No? Okay. And off we go. Yeah, but that's true though, right, Michael? You need to make your clients feel comfortable. You have to disclose the risk that you and the portfolio and everyone else is taking. But you also, there's a level of comfort that you have to provide. Some of it is showmanship, for sure, but it always is, right? Don't fool yourself. It always is in every industry. So, your client has a lot of money invested in you, and they're going to be worried. Why wouldn't they be worried? So you just have to say, hey, man, it's cool. I'm totally on it. I'm on it. I got big, fancy things to say, and I'm on it, right? Money doesn't sleep, right? So there you go. So that's a big benefit, where you just drop the commitment of traders report and you explain it to them in logical fashion, and they're like, good, this guy's on it. This guy's great. Okay? That goes to the mastermind group, right? I should put that in there. We should do a whole thing on explaining. I could probably do a whole day, right? how to sound. We should do that in a mastermind group. 5 strategies for sounding smart. You're at a cocktail party and you're swishing around a drink, and someone comes up to you and they're like, oh, something, something, something. You're like, oh, well, speaking about that, did you know you can use the global dairy prices to predict the price of the New Zealand dollar? All right. Anyways, it'd be fun. Okay, so we did that. I mean, we did all this, right? Okay, that's fine. That's fine. All right. So exotics, they're doing fine. Let's ground where we are. I'm not happy where we are right now, but that's where I am. So we were down here, right? This is my trade. I'm in that weird spot. I'm just playing it out is all I'm really doing. But I've made $700 in interest, and I'm only up $670 in pips. Isn't that funny? I have made more in interest than pips. Yeah, well, all I'm saying, Ed, like obviously that was the quick version. But if you sit down and explain why you're smarter than the other idiots that have approached your client asking for money, first of all, they beg for money like dogs, right? And then what do? They tell you how much money they're going to make you and how quickly they're going to do it. And then what? They're going to guarantee some stupid level of something, right? That's what pathetic people do. And they just won't raise money. You can't fool a self-made millionaire. They're like, I can smell the desperateness in your breath. You're like, you're not gambling my money that I worked hard to make, right? So there's a proper way of doing it. And luckily, all the idiots approaching, right, the millionaires and the billionaires, they're just surrounded by people trying to get their money all day, every day. Just, right? So the thing is, there's a level of skepticism that those investors get. But you can easily win their appeal just by simply not being like all the other idiots. You know what I mean? Just like the first level of appeal, they're like, you know, Wayne, I get approached by idiots all day long trying to get my money. But I like you. You crazy, right? So, anyways, just stand out by not being so desperate. It goes a long way. All right, let's do a news trade. We'll take a look at gold and oil. I think one of my first investors in one of my startups back in the early '90s. I'm on this guy's yacht with them. And he's like, Wayne, I really like you. I want to give you some money and support what you're doing. I'm like, oh, that is so awesome. No, but I got a big New York investor, so I'm cool. Thank you, though. I appreciate that. I really do. And then later on, as we're kind of the day's over and he's turning the boat around, he's like, Wayne, I would really like to get involved. He's like, I put money aside. I've been investing into small startups and entrepreneurs, and I just want to get in with with things I like and people I like, and I want you to take my money. And I'm like, no. It was great, right? So, anyways, I'm in the parking lot and I'm messing around with something in my car, and he zooms by in his Porsche, comes out, and he's like, he writes a check. It was 25,000, but anyways, he writes a check for $25,000 and hands it to me. He's like, cash it or don't cash it, but I would like you to cash it. And he got back in his car, gone. But to a young entrepreneur, that was very, very important. Right? It wasn't millions, but I was negotiating millions at the time. And he's just like, I just take it. It's interesting, huh? Playing hard to get, well, I don't know. Like, I think you can learn a lot from a woman. And there's a fine line to seduction, right? It's not hard to get, but then you have your morals, and you have your reputation, and you have your personal standards, but at the same time you're trying to be seductive, right? Like there's some complexities to it that I think women learn through their life, and men are pigs. We're stupid. So, but it's somewhat of the same art. Like you need money. If you're, let's say, a young fund manager, where in the example I gave you, I was a young entrepreneur, dude, I needed that money, right? I needed that money. So honestly, think about it. I needed that money. And I'm like, no, no, no. But when I took the money, he was grateful for the opportunity. And I actually needed it too, because I was running pretty low on cash, but I did have a big multi-million-dollar deal in New York City. So I needed that, and it got me to New York City and sit down and negotiate deals there, and develop relationships there, which was pretty cool. But these are all different stories. But there's an art to raising money. And just think about most people that do it suck. But I used to teach people back in the 90s how to raise money for their startups, right? And I actually helped them raise money for their startups. And I created pitch events, and I brought in investors and raised millions of dollars. Didn't even charge a fee, right? But I brought in coaches, like many times. So I basically ran an incubator for young entrepreneurs, right? It was a great time. So I could do it again for hedge fund managers, for you. When you guys are ready there, that's kind of what I want to do next. Like for 15 years, I've been teaching technical and fundamental analysis, right? Wouldn't it be great to like teach you how to run and start, launch, go through fundraising, and then manage a hedge fund, right? So like back in the 90s, I used to go on press tours. I don't know if you know what a press tour is, but I'd show up in New York City, and I lived in New York at that time. So I would take the red eye to New York City, because bear in mind, I'm young. I had money, but I didn't want to waste money, because money is precious, right? So I'd show up to New York City at like, I think my plane landed at 4:30, 4:45 in the morning. So I flew all night, right, in coach in a three-piece suit. And I'd land, and I had a Pullman, and I'd get to Manhattan, and I had a breakfast meeting scheduled with somebody, right? So I'd have breakfast with the person and do my meeting. And then throughout the rest of the day, meeting after meeting after meeting. Sometimes it was with potential investors. So I'm thinking of one particular trip, right? So half of it was like I met with an incubator. I met with a VC firm right across from Bryant Park, which was actually pretty interesting, because that would have been about the third or fourth meeting of the day. So I'll tell you about the Bryant Park one. I'd gone through 2 or 3 meetings, and it's like 10 a.m. I've already gone through 3 meetings with potential investors, or with I met with CNN. I met with Yahoo Internet Life magazine, I think it was, if I remember. So anyway, so it's 10 o'clock in the morning, and I'm exhausted. So I get close to where this venture capital firm is, on Bryant Park. And if you don't know New York City, Bryant Park is right next to the New York City Public Library, from Ghostbusters and stuff. And it's one of my favorite places in the world. So I go there. I'm a young man. I got my little Pullman suitcase. I'm in a 3-piece wool suit. And I lay down in Bryant Park at 10 o'clock in the morning, and I sleep. Right? I'm sleeping in a 3-piece suit, which I used to do actually a lot. So then I'd get up, go into the New York City Public Library, splash water on my face, and then I walked across the street and walked into the venture capital firm. And we're sitting there, and I never forget, I'm sitting at the table, and I'm like, I think I'm going to puke. Like, I'm not joking. I'm like, I am so freaking tired. I think I'm going to puke. And I still remember looking up, and he's got the view of the park behind him, and he's like, wah, 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 wah. I don't even know what he's saying. It's just wah, wah, wah. And I'm thinking to myself, don't puke, don't puke, don't puke, because I'm gonna go blah all over the table, right? So he said something like wah 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 wah. I don't know what it was. So, anyways, I got out of there. He wasn't going to invest. That's all I know, right? He's not going to invest, right? He wasn't going to marry me, you know. He wasn't going to put a ring on it. So, boom, I'm out of there. And I forget what I do. Maybe I got this out of order. Maybe then I go to the park and sleep. That's probably what happened, actually, thinking about it. I probably did that. After that meeting, I just slept in the park. But so then clean yourself up because I still can't check into the hotel. So, so that day, I met with, dude, I met with the editor of like Dub magazine. Hot, beautiful night. I remember almost every moment, but I met with, magazines, newspapers, television shows, venture capitalists. Who else did I meet? Oh, the incubator. This is what I used to do on a regular basis. And of course, I had someone set up these press tours for me, right? So you have to know how to work with publicists. You have to work with PR firms. So I've had multiple PR firms in New York City, right? So like you need to know all these things. If you're going to take your successful Forex trading track record and you make 5% a month after month after month for years, great. That's the easiest part. Now you got to start a small business. Everybody is skeptical of you and you're asking for big money. And you're like, look, I was trading a $25,000 account. I turned it into $500,000. They're like, yeah, well, how much do you need from me? Right? And they're much bigger and they're much more experienced and they're looking at your track record and they might even have some person that shows up to go through your track record and pull things out, right? So do you know how to explain your track record and go through it? And what about your disclosure documents and your contracts and your other paperwork? And, do you know how to pick a law firm? Do you know how to pick an audit, a compliance firm? Do you know how to pick an accounting firm? Do you know how to pick a PR firm? Are you going to do a PR run, right? Do you know how to get on stage and pitch your product? But what if you're at a cocktail party? Do you know how to pitch your product? It's a totally different thing, right? How good is your elevator pitch? Most people bumble right through it. It's just, right? So like, you're competing against everybody else in the world. So how do you shine? And there's subtle parts to it too, right? Like how not to be like everyone else. And then also how to be different from everyone else. There's a little difference, right? Most people just don't approach things from the right angle at all. Like they walk in the room and they've already lost the deal. They don't understand that, right? So that's what I'm thinking. Like at some point, I don't know if it's 2020 or 2021, but I want to do these things with you guys. I miss doing that with people, right? It's cool. It's amazing when a friend of yours raises $1 million because you helped them. You should see it in their eyes, man. It's a life-changing experience. It's cool. Yeah. Yeah, Jean, it was cool. In fact, I had an office at that time, which was, I can't remember, let's say 10,000 square feet. I'm a young entrepreneur. I have a break room. You know how good that felt as a young entrepreneur? And I had a supply closet filled with every piece of supply that, I'm like, you need a pen? Boom. You need a stapler? Boom, boom, boom. Paper clips. I got paper clips, right? It felt so good. But one of the things we built in this office, and by the way, all the walls were white marker boards. So, we'd have meetings and we'd just grab markers off the floor and start drawing on the walls. And, the 90s were cool, man. Before, dumb money screwed it all up. But when it was an entrepreneur renaissance, it was a really good time. But Then we got to the point where I was helping people raise money so much that we built a stage in my office and I started having networking events. And like 100 people would come over. I remember Christmas parties I used to to have, and people would come over and mingle and stuff. And then all right, everyone take your seats, and someone would go up on stage. And boy, we should do that with Forex again. Like I just missed those days, man. I miss those days. Those are fun. So we can do the same thing. Like I'll help you with your technical and fundamental analysis. We'll get your trading together. Like, but to me, that's the basics, right? Now what? Where's your business plan? Where's your cash flow statements? What's your vision statement? What's your mission statement? Show me your logo. How does it all tie together? What's your purpose? What's your strategy? What's your sellable point of view? Tell me again. Tell me again. What's your sellable point of view? Boom. If I gave you $1 million, what would you do with it? 3, 2, 1, go. Right? I mean, there's a lot that needs to be covered. Trading should be like the easiest part. Dude, it's either going to go up, down, or sideways. Like, why is it so complicated? So I'm trying to give you a bigger picture. Like, let's hurry this thing up. Let's get this track record out of the way because it's like one of the easiest things, right? Come on, I show you every day. Plan your trades. Have a bias, plan your trades. Use some technical analysis, right? Like, it's not crazy difficult. So, but sometimes maybe you get used to the fight and you like the fight when it's all you got, right? So what we need to do is let's get past that with you sort of mentally realizing that there are more things that need to be done. And they're actually pretty interesting things, especially if you haven't done that before, right? So like once you learn how to trade like a hedge fund manager, then I kind of have to like give you the 6-month version of Harvard Business School and then take you through like a startup incubator program and then move you on to the finesse world of deal making, right? So there's a lot we need to do, bro. Let's hurry it up. Let's go, right? Let's get on with it. Get her done. Right? So like when I show you have a bias and then we go through this and I show you day trading, like, oh, look, you sell there, you sell there, you sell there, sell there. Like, let's move on. Let's get this done. Right? Well, Daniel, like when you're young, it's kind of nice to think of what those next steps are. It gives you a vision for a purpose or a vision for your future, where you want to go, where you want to be. And then you realize today is important. Because a lot of people think like, oh, they'll trade one way because they only got like $5,000 in the bank. But when they have 5 million, it'll be all different. No. Whether it's 5,000, 50,000, 500,000, 5 million, 50 million, you're trading the same way. And you have to understand that, right? So treat your 5 grand like it's 50, right? And just do what you're going to say. So like, for example, what is your sellable point of view? If you said, Wayne, give me $1 million, I'd like to start a Forex fund. And I'll say, why? And now what? You got a good answer to that? Like, why? Why should I give you $1 million? Because I'll make you a lot of money real fast. I'm like, dude, I already have a lot of money. Why do I need you? You know what I mean? Like, you just like they're very intense questions. Like, why? So you're right. You see what I mean? So like, let's get there. Let's do some of these big fun things too, right? So that's why you want to look at your technical analysis and stuff and know where you fit in the market. Are you a bull or a bear on oil? You know I'm a bull on oil. You knew the day I told you we got down to $50 and I said it's either going to 40 or it's going to 60. Which one? See? That's what we need. Very definitive answers, right? Oh, it's going to 60. Good. Okay, up, up, up. The question is why? Followed up with Druckenberg. Well, with the Fed stimulating the economy is likely to go up. And when there's increased economic activity, in this case based on cheap free money, there will be a demand for energy. Done. That's it. And then, of course, in there you say, oh, you know what? I'm sorry, I forgot. OPEC is also cutting supply to drive up prices. So with OPEC on my side and with the Fed on my side, I make free money. It's easy. Like, there isn't much more than that, guys. The Fed is pushing this up, and OPEC is pushing this up, making me money. You understand? That's it. That's all there is. Right? You understand that part, right? The Fed creates more money to drive up asset prices and to create economic activity. So whether you treat oil as an asset or oil as an energy, the Fed's policy is designed specifically to push this up because they're trying to create inflation. The most important thing on the planet to create inflation is oil. You will not have inflation, like good inflation, guys. I'm not talking about Zimbabwe that just prints money. Good inflation from economic activity and all that kind of stuff. The real inflation we're looking for, you will not have with low oil prices. Okay? So you could use this as your fundamental gauge of, let's say, the U.S. economy. Right now, the U.S. economy is going up. Game on. Okay? Cool. And OPEC cut supply. Right in here. I showed you. Less supply, constant demand, prices go up. Done. So if you could have that as your sellable point of view. You're a buyer of energy based on the Fed's policy in the United States and OPEC's policy to drive up prices. Done. Free money, right? See? Now, how do you trade it? You buy it here, you buy it here. Okay? This was also a buy pivot. This is buy pivot next week. Keep doing that till it works. Or keep doing that till it stops working. Okay? I want you to spend less time doing technical analysis. I mean, you need to know how to do technical analysis, but I want you to spend more time having a sellable point of view. If you said, Wayne, give me $1 million, and I'll say, why? And you say, oh, well, I'm specializing in energy. And right now, under the OPEC supply cuts and the monetary policy of the Federal Reserve, oil prices are going to go up. And I think we can make money as long as I'm buying, retracements into support. Okay, I don't know if you're right or wrong. Your clients won't know if you're right or wrong, but at least you know exactly what you're going to do and why. Pretty simple, right? Well, but the why stuff is so much more important than the technical analysis. Think of it. How many hundreds of years did these commodity markets go up and down without MACD? Right? Cool. So I think we did enough today. I think we went longer than, I don't know how long it's been. There used to be a timer on this stuff somewhere. It's all gone. So anyways, I think that's going to be it for today, though. Oh, gold? Okay, I'll do gold quickly. Okay. I forget. If you haven't, so I haven't covered gold in a while. Why is it? Well, like 3 weeks ago, we said this was the high and it was going to go down to here, right? And now it's working its way back up to here. So to me, it's just like, I don't know. Oops, I want to do this pink. But we're essentially just doing this, right? So what I think is going to happen next week or whatever, the beginning of the month, I think we're going to get a move like this. I shouldn't do it this way. I think we're going to get a move like this, and then by the end of January, probably a move like that. So I kind of just think we're doing this. So if you're a bull, you buy at the bottom. If you're a bear, you sell at the top. It's not complicated, right? You see? Look at this, guys. M3 is a sell, okay? M3 is a sell. M3 is a sell. See? And check this out. There's the take profit zone sitting on top of my support. Makes sense to me. So bears stop selling. So what happens next? This is where bulls buy. And next week, this is where bulls will buy. But, you know, everyone's got their turn. If you have trade plans, it keeps you out of silly trades and puts you into decent trades. Cool. All right. Anyways, have a wonderful Christmas. Happy New Year. Happy Santa Claus Day. Happy Consumer Capitalist Day. So on and so forth. And I will see you, I guess it's Monday. And I think I'm taking a vacation or something somewhere soon. So I'll have to figure out that. But it's, yeah, I don't know. My personal life, I don't know anything about it. But anyways, you're important to me. I think you realize, I hope you realize, I seriously could have taken the last 2 days off, right? Completely unnecessary to do the last couple of webinars. But you're important to me, and that's the point I'm trying to make. I totally didn't need to do this, but you are important to me, and therefore I want to keep you close. I hope you know that. So thank you for being on my team. Thank you for the loyalty and respect you show me every day. Thank you for the hard work you put into this. This is a tough gig, right? But I'm trying to inspire you that there's bigger, better, beautiful things right around the corner. So we need to knock out this whole, trading profitably thing, and let's move on to even the more exciting things, right? Marina, well, I think I'm going to be here Monday and Tuesday, but I think I'm gone like the 30th and 31st and 1st, but I don't know if that's a weekend. And then I'd be right back, like, I got to get back for the markets, right? So you probably won't even notice that I'm gone. Okay? So thank you for being a subscriber. Thank you for the likes. Thank you for leaving comments. Okay? Peace on earth. May the pips be with you. May our profits be above average. And again, thank you for being in my life. You're good for me.